And you know why they do poorly and the mistakes you're going to avoid? Because they spray and pray. They will invest in as many companies as they can think of. Think about it, they're marketing outfits. Fund managers, your pension goes to a marketing outfit. That's why when you go down the road and you see M&G, Fidelity, and all of this, they're advertising so they can get as much money as possible under management. Why? Because they charge fees of a percentage of assets under management. So they need to get as much under management. But if they've got lots of money under management, they've got to divide it into small gene pools of UK growth. So they do geography and style, UK growth, Japanese income, American growth. And each one of those funds will have all those trillions divided into sublots of maybe 50 stocks at a time. So if you put your money in just 5 funds, that's 5 funds, 50 stocks, that's 250 stocks. So you look down and you go, oh, it's okay, I've got a bit of Amazon and Apple and Oracle. Well, you've got 1/250th of your capital in those. No wonder it's not performing, let alone the fees they're charging. You can ask them all of this. The first thing I want you to do is to be aware of it. Please, for God's sake, be aware of it.